Welcome to the fun and mentals of real estate. We have another question of the day for you, but I think it's Glenn's got it again this week.
Well, we got our guest of honor back, Dan Luigs from Insurance Store. And Dan, how do smart homeowners choose the right insurance policy?
Right.
We talked about investors, but it was so popular. I just want to talk about regular homeowners and have an insurance expert here with us to kind of guide us in that direction.
Fantastic.
So once again, Glenn, that was a great question.
Thanks. I don't get that very often. I don't get that too often.
Maybe
So
your
you'll
wife
see
will
me-
be listening today. So
you'll see me beam when anybody says that.
So to answer that one way that they do is they get a recommendation from somebody if they don't have somebody that they trust already. So
Right.
the mortgage lender, the real estate agent, maybe somebody that's good with finance in their life that recommends somebody that is a good advisor for the house insurance.
Right.
Often I get a phone call coming in where people have done some research about house insurance and they've got some ideas, some thoughts, and they say, I'm super uncomfortable doing this myself.
Yeah.
Here's what I know. Here's what I'd like to know. Help me find a good insurance policy that covers what I want covered at a good price.
It's so much more than just the premium. That's what I tell people.
All right, so much has changed in the homeowners insurance industry in the last 2 years.
Right.
Everybody knows that all their premiums have gone up.
Yes.
And when you're purchasing a home, it's way more expensive for insurance than it used to be. So the first question I have for you is why? Why is this a problem and an issue now?
So to help Glenn out a little bit, for people that get a loan through Glenn, and Glenn gives you an estimate on house insurance,
Yeah, it's so hard. Yeah.
it's really, really hard. So when people call and say, hey, Dan, or Glenn calls and says, hey, Dan, help me out on this one.
Right.
I said, man, I'm scared to give you a number because there's so many factors that go into it. Go back 5 years, and I could have got you within a couple $100, probably.
Yeah, everybody can almost estimate the homeowner's
Yes,
insurance.
I had it down so good, and now I'm not as confident. So why do you think that is?
So why? What's going on?
Yeah, so we were at a big conference room with realtors, lenders, and they throw the question at me, why do you think that is? And the question in that particular case was, why am I so wrong all the time these days? And I said, well, here's the answer. You're not taking the number that you're coming up with in your head and multiplying it by 2. And everybody in the room just laughed and laughed. And I'm like,
It's
well,
doubled.
subtract 10% from the doubled price, and then you're in the ballpark probably.
Yeah,
like,
makes sense.
Is it that bad? And so to your point, yes, it has radically increased.
So then I'll say it's that bad too, but then I'll do one new construction, and it's $550,000 house, and they get their insurance quote, and it's $1,200.
Yes. So on new construction, you get roughly a 40% discount.
40%,
So
okay.
I hear that one of the reasons is because insurance companies are losing money. But Dan, I got a really hard time feeling sorry for insurance companies. So what in the world is going on?
I have a hard time feeling sorry for insurance companies
What is going on?
Because they've made such a good amount of money for us for years and years
Are
and
they
years.
actually losing money? Is that just a rumor or is it actually true?
It's actually true.
So what happened?
So, well, you tell me. The climate seems like it's changed. Seems like things are working differently than they used to. When we were kids growing up, we got a little bit of hail and we'd run outside and we'd play in it and it was exciting.
Right.
Some of the storms that have come through lately, if we go outside, should we wear a hard hat? Hey, honey, are we going to die? Like, some of this hail has been so big in St. Louis, grapefruit size. Like, you get hit with that falling out of the sky,
it's going to ruin the roof, the siding, the windows.
Is it just regionally that it's gone up, or is it nationally it's gone up?
Nationally, it's gone up. So California, obviously, the big fire that just came through.
And we did go through a relatively calm period for some years where there wasn't a lot of big storms, big tornadoes.
Florida's had a lot.
Yeah, Florida's had a lot.
Hurricanes.
Louisiana's had a lot.
Louisiana.
California, obviously. Colorado. Right. So there's been a whole lot of wildfires.
Tennessee, some part of Carolinas.
We had a big flooding.
Flooding,
right?
A lot of flooding.
A lot of flooding. A lot of natural disasters.
So we're just saying more weather events.
The frequency and severity of weather events is skyrocketed across the whole country. So there's not really an area that hasn't been touched. St. Louis has certainly been affected.
Especially with the hail.
The hail, incredible. And then tornadoes. We used to have a tornado occasionally here or there, once or twice, and now it's 2, 3, 4, 5 a year.
Mm-hmm.
South County destroyed, Wentzville destroyed.
Right.
Used to be Maryland Heights was the area that
Right.
was
Maryland
destroyed.
Heights. Right.
And in the city, right?
Yeah. Now it's
So weather events is one. What's any other reason?
and then on the severity side, the weather's bigger weather than it's been in the past.
Okay.
And to increase the dollar amount, the labor and materials have skyrocketed.
Inflation.
Right, inflation.
Glenn and I were talking. We're like, "Oh, what's a new roof?" We
I
used
remember,
to say
yeah, 2,500, $5
six,
grand,
7
yes,
grand.
yeah.
Man, 10 grand. I think they're getting over on you. Those roofing companies.
Right.
And now $25,000 and $30,000 are numbers we hear pretty often.
Sure, you were really during 22, 21, 22, and 23, inflation just really got out of control, almost up to past 9%. And so just the cost of materials and labor
And there
alone.
was a shortage.
And I think
right?
that they just didn't stay on top of that. They didn't catch it quick enough. So they're paying out all these claims with inflated labor and material costs. And they're like, oop, I'm losing money.
Yeah, so you talk about inflated costs. And at that time, a lot of people thought we're going to hit these high prices and they'll come right back
And
down.
they'll come down.
In the real estate, there'll be this huge bubble and prices are just going to skyrocket.
Transitory. They told us it was going to be
they're gonna hit the
transitory.
Right,
Yeah.
transitory, right.
Yeah.
And then it sort of plateaued. So the
Mhm.
insurance companies can't react quickly. They've
Right.
got to file in advance for when they want to
Yes.
make price changes. And then, probably won't happen again next year. And then it did.
Then it did.
And then it did.
I
And at that
see.
point, the insurance companies reacted and they had to skyrocket prices at historic price increases that insurance agents all across the United States have never seen before.
Mm-hmm.
Florida got all the headlines. A lot of companies went bankrupt. They were getting 300% price increases. So here in St. Louis,
Wow.
we didn't feel that extreme.
Right.
But we did see 30, 40, 50,
Yes.
80% price increases.
Wow.
And finally, enough of us said, "Oh my gosh, did you get it too?" "Yeah, I got it too."
Yeah.
"Did you get it?" "You got it too."
Right.
"We all got it."
Right.
Has it kind of plateaued now? It's starting to come back down a little?
So
or-
good news. Good news. Yeah, I
Yeah.
finally get to say good news.
Yeah.
So insurance companies are starting to back off the pricing. Insurance companies are starting to back off the pricing on renewal increases. Insurance companies are starting to loosen up their guidelines. So we talked to investors earlier on certain guidelines where they wouldn't insure or certain companies wouldn't do certain things. Well, insurance companies are loosening up a little bit where they're starting to, yeah, we'll do that again.
I see.
Right.
Where for the previous 3 years, it was just narrowing what they were willing to do,
Mm-hmm.
which was really strange to talk to somebody with great credit, no claims. "I'm not really sure I can take care of you because you got a flat roof."
Yeah.
Like, who cares? It's 3 years old. I know.
Right.
They just wouldn't do the insurance.
They wanted their perfect model.
They wanted everything
perfect
exactly
customer.
right. And
Right.
the other factor behind all that most regular people would have no idea, there's something called a reinsurance company, and those companies backstop all the big companies that we know.
Right.
So all the A-rated companies have bigger companies behind them with more money that backstop the whole system.
Warren Buffett being one of them.
Warren Buffett owns most of these reinsurance companies. So Warren's rule is don't lose money. So when you're investing, don't lose money. And Glenn, do you know rule number 2?
No.
Pop question. Pop
What's rule number
question.
2?
Rule number 2 for Warren Buffett's rule of investing is see rule number 1. Don't
I
lose
love
money.
it.
Right.
That's great, Dan.
So
And it's tough with the insurance companies because they're regulated by the state and the federal government. So they can't just come in and say, we're raising our prices. They have to get approved by the state
Yes.
insurance
And that was the
commissions.
big California problem was
Right.
they said we need triple the increase,
Right.
and the state said no.
And a lot of them just pulled
The
out.
fire
So they're like,
happened.
okay, I can't insure you.
The
then.
insurance company said, "Hey, we have a huge risk of a big fire. Like this might be the biggest we've ever seen. Don't worry about it."
Yeah.
But we are. And then
Right.
the fire happened, and then they also were leaving the state because we can't make
Right.
any money here. And
Can't make any
too
money.
big a risk.
They are in business to make money.
So what are my options when I'm looking for a new home and I get that insurance quote and I'm just shocked? It might even I've seen in some cases where it's going to kill the deal. My insurance premium is so high now my ratios are out of line.
Well, I got one answer for that.
Pay
You call
cash?
you
Yes.
no, you call Dan,
Right.
who is a broker who can look at many different
Right.
companies. A lot of people look at their one company they've been with for 20 years, and that's the only one they get a quote from. So I would say get to someone like Dan who can quote many different companies
Right.
to find somebody who says, yeah, that's fine. I'll do that deal.
Yes.
right?
Yeah. So as a broker, that's why I'm a broker, is so that,
Mm-hmm.
hey, am I getting a good price?
Right,
Well, yeah, we've shopped 10 different places.
right.
So yes, this is a good price.
And so roofs being a big deal because of all these weather-related, extreme weather, really. The roofs are become. That's why the roofs have become a really, really big deal.
Yeah, so Glenn and I remember back when we used to just buy our own roof, and then the
Yeah,
insurance companies
yes.
came in, and the insurance companies started buying everybody roofs.
That to me, it's changed in the last 5 years. So it used to be I had a budget that my roof is going to last 15, 20 years, and I
Right.
know, and I've got to put money aside and pay for my room. Now the insurance company is going to give me a new roof. I love
Right.
that when they say that. The
Yeah,
insurance company is going to
the
give me a new
roofing
roof.
companies with their advertising model that says,
Yes.
we'll get you a new roof for
Uh,
free.
Free,
That's
yes.
right, for free.
Yeah, there's nothing that's
Right.
free.
Right, and so the roofs are becoming a big deal with insurance companies. So the age of roof.
And in your business, you're seeing a lot of that being negotiated in the purchase of the home.
Oh well, now because I've been educated by Dan,
Yeah.
the first thing I do when I'm talking to a seller about a house is, when's the last? How old's your roof?
Right.
I don't know. I don't really remember. Okay, great. When's the last time it was looked at? Yeah, I don't know. Okay, well, I'm having my roofer look at it, and we'll let you know if you need to file a claim. Let's do it now. If you need a new roof, let's know now. We can build it in the price. If you got to pay for this out of pocket, fine. Let's build it in the price because I know I can get more for that house with a brand new roof than a 15, 20-year-old damaged, hail damaged roof, right? I'm going to have more buyers. You want a bigger buyer pool. I'm going to get more money. Let's raise the price up front. Let's get that paid for and get ahead of it. Right.
Such a great idea because it might knock somebody out of that really wants that house is going to buy it. It might knock them out because they
Right.
can't.
So if I have a roof that's what, older than 10 now, it's like a big deal. And I'm like, what in the world?
I know my guy told me it lasts for 30 years. 10.
Yes,
It's only a
yes.
third, Dan. Now
Right,
it's
but
old.
insurance companies are sensitive, get sensitive around
Right.
that 10-year mark, right?
Around the 10-year mark, some do, and then some are 15. And
Some are 15.
thankfully, a couple of them are going to loosen up and go to 20 now.
Ooh, yay. And I'm
But,
buying
yeah.
these 30-year shingles. And I'm like, well, wait a minute. Should I get 30 years out of them? Roofer's like, yeah, nothing lasts 30 years with hail around here in St. Louis. Oh, okay, fine.
Right.
Great.
Right.
And so insurance companies know that. But when you have a newer roof, then you're going to be able to withstand the hail better.
Better, yes.
First
So I had,
hailstorm is probably not going to knock your roof off.
I had a gentleman call me, and he's super mad because he was in Baldwin, and he says, "Hey, do you got a good roofing company?" And so I sent one out, a for-profit roofing company,
Right.
like all of them are.
Yeah.
And he's like, "This guy says I don't get a new roof. Like, I'm so mad. All my neighbors are getting roofs." Well, the roofer called me from that guy's roof and says, "Hey, sorry I'm calling you. I'm on top of the roof. I don't want to come down from here without letting you know." He goes, "You told me this house is trashed." I go, "Yeah, it's in Baldwin. Like, they got blasted. Everybody's getting a new roof." And he goes, "Not this one." I said, "Why would you say that?" He goes, "Because he just got a new roof 2 years ago and it withstood everything." He goes, "As I'm looking around at all the houses getting new roofs or with a roofing sign in their yard that haven't got one yet, because they're all 20-year-old roofs."
Yeah, they're all 20-year-old.
You know, so those did get blasted. This
Right.
withstood it. And so when the guy calls steaming mad about my crookedness,
You'll know what he's saying.
And then the guy looks around and goes, that does make sense.
Yeah, there you go.
My roof is new.
So it's not just roofs though. There are some concessions we can make. So I call you and
Yes.
say, hey, I thought this insurance policy would be around $2,400. You're telling me it's $4,500, and now my debt to income ratios are out of line. What are some things that homeowner can do? Maybe he really wants the house, but he's willing to concede on this, or maybe move that coverage.
Yeah, so a few different things. So what Glenn just said was, you can't buy a house because your house payment went up about $180
Right.
over what he thought. He knew you had some cushion.
Right.
You had $100 cushion, no big deal.
Right.
And then this number comes in and it's out of whack.
Right.
And the lending requirements say you cannot buy a house.
Right.
But you know you can afford the payment. It's not a problem.
Right.
But the lending company says no.
Right. It's
So
a math problem,
yeah,
right?
so what we do oftentimes is, "Hey Glenn, what's going on? Hey man, can you shave a couple bucks?
Right.
Is it a couple or do you need a couple hundred?
Right.
a
I'm
month?"
usually going to tell you what that
Yeah, a
number
couple
is.
hundred a
And
month's different
usually
than-
I'm going to have that customer on the phone with me, or I'm going to have him calling you direct. You know, it's not
Right.
like something we're just trying to make a deal happen.
Right.
And
so
I
what do you
still
do?
want to protect my person.
Yes.
Right.
So how
So
that
like-
conversation goes on my side is, "Hey Joe Smith, I don't know if you and Glenn have talked or not yet, but if you have, you already know what's going on. If you haven't, let me break it to you. And we need to save a couple dollars on the house insurance, which sounds crazy, And really is kind of crazy that over $17 a month. You
It might
can't
not be
buy a house.
17. It's
Right.
like I said, sometimes I'm just so shocked that that number's so high.
Right. So what do you
Yes,
do?
yes.
What are some of the things you do?
So we'll look at the simple ones to look at the deductible,
Right.
take it from whatever it is and raise it
Raise
up.
it up a little bit.
If
And
we
there's
can-
going to be limits to that depending on what kind of loan you're getting. FHA,
Yeah, so my-
conventional.
Hey, Glenn, what do I got to
Right.
work with on the deductible?
Right.
Let
Yeah,
me
they
look-
may
let me
not
look
let
it
you
up.
go with a 10 grand deductible or
probably not.
3%.
Yeah,
run the nail.
sometimes they call back and say, hey, it's 10. I'm like, wow, 10 grand to work with? Like, this is great. We'll save a bunch of money.
Right.
Right.
And as a buyer, I'll say, hey, I'm going to introduce an idea to you. You might like it, you might not like it, but hear me out. And the hear me out part is, hey, day after closing, call me back, write me a little check for the extra, and then we'll lower your deductible back down to what it should be.
Well, buyers can
And
adjust
really-
their coverage whenever
and
they
really,
want.
I would never suggest that to somebody that didn't have that money in reserves or whatever,
Right.
because we want to do what's best for our people. But there are some
Right.
things that maybe they give up a little on this to make the deal work.
Yes, yes. It's like we can adjust the coverages and we can always put them back after the fact. So sometimes we do have to do something extreme, like strip out a lot of coverage. Sump and sewer backup is one that costs $100 or $200 a year.
Right.
But then we can, is that a coverage that you want?
You could add it
We
back
can
in
put
at
it-
some
put it
later
back
date.
in. Yes. Yes.
How often do we're going to include the cars with the insurance? Is that every time or most of the times?
99% of the time, it makes
that's-
sense to bundle the home and auto
Yeah, right.
together. These days, going back to something that used to happen 12 years ago, 15 years ago, some of the companies are requiring home and auto both in order to get the good house insurance price.
Sure. Makes
Some
sense.
companies won't
right?
do a house only. They require home and auto both.
Mm-hmm.
To me, that's something that's changed over the last 10 years, I would say.
Yes, 100%. Yeah. When it came back, I'm like, oh, I remember this game from years ago.
Right. Right.
But yeah, and the
And-
reason that is so that they can spread the risk. So if the
Right.
house has a problem, they're making money on the car insurance.
So the other thing that I've seen over really more than just the last 2 years, probably 5 or 7 years, is a stated policy versus a full coverage policy, or what you're calling a replacement policy.
Yes.
So a stated policy is if I don't state it, it's not covered. So if I don't say in the policy that a deer running through your sliding glass door is covered, then it's not covered.
Yeah, so there's varying levels of policies. For the most part, for a homeowner, they're getting an HO3 or HO5 policy, which means, for a very poor description, full coverage.
Okay.
Full coverage doesn't include things like sump and sewer backup, doesn't include flood.
Right. You still need
doesn't
all your
include
riders.
Earthquake, so there's some
Right.
riders. But for the most part, it comes with a good basket of coverages
Mm-hmm.
that does a lot of things.
Mm-hmm.
Where, like, there's a basic form, it covers fire.
Right.
And then after that, you're lucky if you're covered for something else.
Right. So the stated policies are a lot cheaper, and so you may call
Mhm.
one insurance company and get a really low number, but you're not comparing an apple to an apple. So a stated policy, not said, not covered, full coverage doesn't have to state every problem that may happen.
That
It's
lender's
just
going to
your-
always want replacement costs. So unless you're paying cash, the lender's going to have specific requirements on that insurance company, who the insurance company is, has to be
Right.
A-rated. The good news is the insurance people and the mortgage people speak the same language. Dan knows the guidelines just like I do, and we're never going to get anybody in trouble. But the good news is there are ways to move it around a little, ethically, legally, to make sure you can get in the house.
Right, and just make sure too that if you did get a bill that and your insurance went up and you're already in your home, that you call Dan and get it repriced. All you have to do is shoot them over your policy that you have now, the declaration page, the coverage that shows the coverage, right?
Yeah.
Stuff like that, and he could go to work and quote you. Doesn't cost you anything. Does just boom, scan it, take a picture, send it to him, and get that insurance requoted, because we just had one recently that was like $4,500 for a little house, a $100,000 house, and we were like, what? $4,500, and then
crazy.
it got covered for. They rebid it with another company, and what did they get?
I want to say, was it 2,200?
Yeah, yeah, it was half.
Yes.
It was
right?
half. So you did, just because the insurance company you've been with 20 years says it's 4,500 doesn't necessarily mean it needs to be.
Correct.
Because
correct.
insurance companies, every insurance company has their risk level. One may have lost more money than another one lost, right? And so their tolerances are different for what.
And just
area
like on the
they'll cover.
investor side, we talked about when you've got a whole bunch of properties, that they own in one small location,
Mm-hmm.
and the tornado wipes them all out. Well, the insurance company insures a whole lot of houses in St. Louis,
Right.
and then as you get down to smaller and smaller territories, when they've got too many in a grouping, they don't want that either. They want to spread their risk out also.
Right. So if you're in Baldwin and they're like, oh, wow, we got too many in Baldwin, this particular insurance company is not willing to take any more on or really doesn't want to, you need to move to another insurance company who doesn't have a lot of risk in Baldwin,
Mhm.
and they're going to give you a lower price, even though they're both good insurance companies. So this is one of the reasons, too, probably why you're seeing these coverages bump all around is their level of risk in the area that you're buying
And
a house or
with
own a house.
computers, internet, now AI,
Right.
they have access to more data points and ability to crunch numbers at a level
And
that we've never
amazing
seen.
Wow.
pictures and trees, all that.
We
Yeah.
talked about the drone
Yeah,
inspected
right.
your
Yeah,
property.
I bought a house, and Dan was like, "Hey, what's going on with your siding?" I'm like, "Nothing's going on with my siding. My siding's fine." And they're like, "Well, insurance company thinks there's something going on in the back of your house." So I had the tenant take a picture of the back of the house. I'm like, "See, it's fine." Well, there were leaves on it, and they interpreted it looked like there were holes in the siding.
With the pictures, it looked like your house was destroyed like other
Yeah.
Baldwin houses
That's
were.
right.
Yeah, like hail damage or something, like holes on it. I was like, "No, it's fine."
I'm like, I don't want to alarm you, but you might want to look at the back of your
Yeah, that's
Isn't
why.
it crazy?
It
I'm like,
looked-
I'm over there all the time. It's fine.
That's
you
why
know?
AI will never replace any of us.
Yeah.
Well, so they are using drone to look at so.
And,
And they've-
pictures,
and
and
they've-
if
and
there's a
they've
great
been
big
using
huge
drones
tree
for 10
right,
years.
Yeah,
right.
but they're honing in more and more on.
So I would say this too, Dan. Your life's going to change. Your lifestyle, your finances changes over time. To sit down and have a discussion about your insurance, maybe not every year, but once every couple years, because I may be comfortable with a bigger deductible because I have more money in savings and I can
Right.
get my insurance lower. So it's
Right.
just so important to get with a professional like Dan.
And I don't want 3% wind and
No, but I
hail
don't want-
because as Dan was talking about, if you didn't see the episode on the investment properties, 3% wind and hail means 3% of the replacement cost, not 3% of the cost of the roof.
Yes,
That's
yes.
like in lightning. That's like a lightning bolt right there. So if I bought a $350,000 house, it may cost 500 grand to replace it, and now I've got a $15,000 deductible for wind and hail.
I had a
And
bank
you're like,
manager
what
call,
just happened?
and she says, "Oh, I got this great deal. I got this 2% wind hail deductible. It's wonderful." And I said, being curious, I said, "What is it about that you find wonderful?" And she says, "So I got a $10,000 roof. Back when roofs cost 10
See?
grand. I
Right.
just pay a couple $100. I'm good. Like, this is
2%.
great." And I said, "Well, you run a bank. You're really good at numbers, and congratulations, you did the math right. 10,000, 2%, you got
Right.
it. You nailed it. But you used the wrong inputs."
Right.
And she says, "Well, wait, what should I have used?" I'm like, "Well, your rebuild cost of your house is about 400,000, I think, plus or minus." She goes, "Yeah, you're right. It's 422 or whatever it was."
Mm-hmm.
I go, she goes, "Are you saying I should take 2% of that number?" I said, "How does that math work for you?" And she goes, "It doesn't.
It doesn't work. Can you redo my policy? Give me that $1,500 deductible back,
She goes,
or
"Well,
the
that other insurance
2,500."
guy said 2%. And he was smiling and he made me feel good about that.
Mm-hmm. He didn't explain it to you.
And I thought I knew
Yeah.
how to do the math. She goes, "I'm
Fantastic.
really freaked out right now. Can you fix it right away?"
There you go. And this is part of building your wealth.
Yes.
Right? So it's protecting your wealth, protecting your assets, builds wealth, and keeps the money in your pocket. So these things are important to pay attention to every year when you get that insurance bill.
Oh, I'll throw one quick thing in there. We mentioned bundling. So for first-time homebuyers especially, sometimes they will want to have a driver either not included, or they want to exclude a driver, or they just don't tell somebody that they've got another driver in the household.
That's an important thing to.
And of course, they happen to lend the keys out, or the other driver takes the keys out, and then there's a car accident with a uninsured driver that lives in the household, which isn't a big deal because you can lend your car keys to anybody that doesn't live in your household. They take your car for a short period, claims covered.
Okay.
When it's a inside your house person that lives there all the time, that claim's not covered. The insurance company can choose not to write a check. So for first-time homebuyers, that's one of the things that I run into all the time is, well, I don't want
Right.
to cover my partner
Right.
because they got their own stuff.
And
so
the other
don't
thing
let
we
her
were
do
talking
it, yeah.
about is is a first-time home buyer, maybe live with their parents and their car is insured at their parents' house, and they leave the car insured at their parents' house and only buy homeowners. But now they're at risk because they don't live in their parents' house. They live in
Yes.
their new house. So that policy really may not, probably won't pay out if they have an accident because they're not insured under their new house address.
Correct.
So you have to be
yes.
careful of that when you're buying your first
So
house.
you pay $200 more on your house insurance, $500 more on your house insurance because you didn't bundle because you left the car insurance with mom
Right.
and dad. They have a policy renewal. They leave everything alone with the vehicles and the drivers. You don't have coverage over here, so mom and dad are saying you live at home, and strangely, you also own a house with utilities in your name, no tenants,
Right.
on. So for a small little fender bender for $2,000, they probably write a check. But if it's a bigger dollar amount and the claims adjuster says, I don't feel like writing a $200,000 check when I don't have to, I'm just going to deny this,
So, yeah, that's a
shorten
big
my
deal.
workload.
Right.
Yeah,
I don't have to do any more work.
that's
I'm-
great
I'm
information,
finished.
Dan.
There you
Yeah.
go.
All right.
Well, thanks so much for joining us. I hope this helped you build your wealth, protect your wealth. I'm Angela Dillman here with the Dillman Group at Keller Williams Realty Chesterfield. This is my wealth building partner.
Glenn Calvin with Guild Mortgage,
And
and
we're
don't forget
here-
about
And
hey,
Dan Luigs
Luigs with the insurance
with
store.
Insurance
Give your number
Store.
again, Dan.
314-503-0964, or just look up my last name, Luigs, Luigs, and you'll find me.
All right, awesome. All right, so we are here to help you live your dream lifestyle
Build wealth.
and leave legacies that matter. Till next week.